So, first of all, welcome to y'all. Welcome to the Quant Data Wednesday Q&A. We run these every Wednesdays and Sundays for you guys to ask questions. We also go over some data, we go over some ideas, and we always have fun things to talk about. And it's great because the market's dynamic, and so these Q&As are also dynamic. But as promised, I know a lot of you guys have asked for this, so at the end of it, I'm not going to do too much. At the end of it, I'm going to leave a big chunk of time for you guys to ask questions because I know there's a lot of new people. And not only the new people, there's also a lot of people who've been here for some time, but they're still just trying to figure things out. And so I'm going to be a nice ABJ, right? A nice host, and let y'all ask questions. So, show of hands who participated today in the day trading today. Who participated in the market with us in the quant data team? Because today was, we didn't move too much, to be honest. This is what the price. This is what the stock chart looks like. Let me show you real quick on SPX. Overall, we didn't move that much. I know some people are going to say, 61.90-ish at the bottom to 62.20, I'd say. 62.25, 62.30 was a bit of a stretch. But 30 points, we've seen ripper days. We've seen days that are a little bit better. Today was moving really slow. We really crawled for, a good chunk of it. Most of our day trading ended at around like this mark, around 8 a.m. Around 8:15, we caught this a little bit of a move down. What was this big candle down today? We all know it was the tariff news regarding Vietnam, right? But one thing I wanted to talk about today, which is a part of the list. So I'm actually going to do this one first. The buy the dip moment. How I know, how I have confidence in anytime we get some sort of momentous move, right? So let me show you, right? We had a big move down today for that news. Let me bring up SPX. So this is SPX. Okay, now some of us got a little bit freaked out when we saw that move down. I'm going to just draw a quick line here. Right, so this is July 2nd. So this is today. Now some of us got freaked out right there. Now if you're looking at the 1 minute, it looked a little bit crazier, a little bit scarier. Let me show you why. Because the 1 minute looked like this. Y'all see this right here? Right, so we had this big drop. Right now, this right at 7:45. This was the breaking news that I posted in the chat regarding again the Vietnam tariffs, the retaliation. And so when we had this, I want to show you what the data looks like. So this is today's data. Let me bring this down a little bit. So we're talking about right here, 7:45. So this is today's data. Now, what do we see so far coming out, going into the market? This is 7 a.m., just about 6:50. Let's just bring it to 7 a.m., or optimal time to start trading, right? July 2nd, 7 a.m. What do we see around 7 a.m.? Now, I know the net drift during the time was a bit of a mess, right? We saw this. Bit of a mess here. Not really getting a million diversions. What was really interesting today was that we saw right from the open, this is the zero line. Now again, this is my filter for 0 days only, out of the money. Only like direct bets, no spreads or anything like that. We started it underneath. So right here at 7, throughout the day, we actually started negative the entire time. Now, zooming into the 45, so this right here is the news, right here, 7:43, 7:45. That was right when we started to see that big push. You guys see this line right here? Right here. We had puts all of a sudden just spiked upwards because of that tariff talk. That correlates to right here. Now, I want to show you what the data looks like, because here in quant data, we understand that the options Greeks usually are going to tell us the truth, right? So 7 a.m. Yes, I'm in PST. I'm on West Coast, the best coast. If you're in EST, just add 3 hours. I'm just way too used to being West Coast time, but we matter too here on the West Coast. Yeah, so 6210. This was that one strike that in stream today we kept saying that this was the one that's going to tell us if all of this green delta is actually going to lead us upwards, because green delta is telling us long deltas. Long deltas represents long calls and short puts, so generally a bullish sentiment, right? So what do we notice here? 6210. This was, someone was trying to short this, and how I always kind of picture this in my head, that's helped a lot of you guys as well, is if you look at it like this. Right, so in the chat here. So if you were to join an army, if you're looking at this like an army, which side of the army do you want to be on? If we're trading here, if your army's here right now, 6,200, right, at 7 a.m., which side of the army do you want to be on? You kind of want to be on the green army, right? Otherwise, you're going to be like this. This is good old Jon Snow, right? Battling against all these guys, just a lone man. That's kind of what this is. So you can kind of make a bet that this is probably going to get steamrolled at some point in time. And that was a good bet, because when we started to take on longs, you can kind of see that, yes, long deltas shows a support. So it's giving us support for upside. Gamma's giving us that target. What's the most valuable contract at the time? 62.15, right? Eventually we saw 62.20 and then 62.25. We actually did see 62.30, but we'll go on about that after. So let's zoom into further. So this is where, you guys see that right there? Did you guys see that? So here is your 62.10 negative, right? We're at 705, it's still negative. Now you can watch in real time, like we were while we were trading. You can see that it just gets depleted, right? We're zooming up forward, another minute, and what happened to it? From 720, in 2 minutes, they gave up on this position, right? You're getting that steamroll of delta pushing us forward. Oh, thank you. Oh, look at that. Oh, thank you. Oh, this is definitely going on YouTube. Maybe. Maybe. Always nice when my wife makes a guest appearance on the stream to hand me something. And whatever she handed me is pretty damn good. Oh, right. So, again, we made that bet that this was probably going to get steamrolled, right? And we would get a further move up, because overall, when we're looking at the buy-side Greeks at 7 a.m., you can kind of depict that generally the market is bullish, right? The market is bullish because gamma's green, volatility, right? Vanna is also green. It's also bullish. All the strikes above us are getting interest. This little bit of a negative delta pothole, we made that bet that it wasn't enough to keep us down. So I'm going to zoom forward now to 745, which is where we had that little bit of a downward move, right? Let me go back here. Let me go here. So here we are, 745. And the more you trade with using quant data and using Greeks, understanding Greeks, the more you'll understand that this is actually moving the market. This is where things are. So how many of us, because I asked this in the live stream, how many of us, before understanding the market, right, would see this big Ripper candle and assume that like it's over? Like we are curling right here. Who got scared, right? A lot of beginner traders, like myself included, if 6 years ago, right, if I saw this, I'd get scared right here. I'd be like, hell no, I don't want to participate in this. This is no good. We are flushing now. But here in quant, because we saw exactly this. This is your 745. right? We dipped down. What's changed in the profile at 7:45? So right here, we're at the bottom now, like right here. What's changed? Has the profile changed at all? Has the overall sentiment of the day changed from this one move, this one news? No, we can say no. Because all that's happened is we were brought right back down to where we originally entered, right? And we're just right back into the 62.10 pothole again. This guy who's short, he's back at it again. But rolling forward, right? And it's gone. Just like that. Because overall, the profile, everywhere else is green. Again, bring you back. I'll bring you back to Mr. Jon Snow. He might come back a little bit, but overall, he loses. I know in the show he didn't lose, but that was because he got help after. Anyways, so that's how I know. That's how I can use the options data and the Greeks and the quant data tool to give me confidence in buying these dips. Because without that, I would have, this would have brought me fear. I would have been like, okay, no, the market's turning around. I have no idea anymore. Because this big candle, that was a 10-point flush in 1 minute, right? So we're gonna continue on. So thumbs up if you guys understand today's stream from that, because I know you guys wanted me to explain that a little bit more. Hopefully I did a good job, because I think, this stuff is powerful. We're gonna go to the last 2 days of trading now. I'm gonna go through it really quickly because I promised there'd be more questions. I see there's some questions already in the chat. I'll scroll back up and get to those. But yesterday was absolutely terrible. I know you guys know that I had a red day yesterday, and I can tell you why I had a red day yesterday. It's all about controlling yourself when things don't line up, right? Not every day is going to be as easy as it was, right? Today was very easy. Monday was very easy, right? Let me double check here. Yeah, so this is where we are. Let me go back to the chart here. So we're gonna go back to the 5. So that's this day, right? The past 2 days, actually not so easy. Last week was a lot easier. And so I'm gonna show you yesterday. I'm gonna show you what delta potholes look like. So we're gonna draw this really quick. Ooh. So that's this day. Just splitting up the days a little bit. And then we have this day. Ooh, this was a fantastic day. I know I skipped that day, but this day where we participate. I'm going to show you Thursday, and I'm going to show you today. Finished in the 5 minutes. So this is what the profile looked like overall, around the 7:45 mark. So that's like right here, 7:45. Now 7:45, MVC was 61.75. We didn't quite get there. We got pretty close, right? 61.79 there. So, but we got 61.77 actually. So this overall though, how do I know that this is kind of going to be a mess? It's going to be a little bit difficult to trade because this is how we open. So I'm going to show you what the open looked like, right? It's about being patient, usually, with trading. And it's about understanding at which point in time your strategy is going to perform the best. So this is 640. Right? We're not going to go right to the open. But you can kind of see that, yeah, overall sentiment looks downside. But what is here? Like, what kind of area are we trading here? Right? Usually when you look at the profile, you want to see something that looks like this. Something very clear, right? Like clear bullishness, clear bearishness. Oh my good. That's not good. Thought I changed the color. Clear bearishness, right? And let's say we're trading, let's just give it a put side. Let's just say we're going with this. right? So this blue line is where we're trading. That's price right now. Does this look anything like this down here? No. So what's this? So we just talked about long deltas. What is long deltas? Let me just drink this drink. People are long, right? They're either long calls or they're short puts. So what that tells us is they want price to stay above here. They do not want to see price come below. And you can see this. In the net drift, we talk about the 1 million in divergence. Do we have a million in divergence here at any point in time? No, not really. It's pretty darn close. Right now, that 1 million in divergence is my metric. It's something that I use to trade. But we never got puts surpassing by over a million until like way later down the road. But we know that this, like if they really wanted to defend this, they could. I know this looks bad. This should overall steamroll us, but it's not a smooth trade. And so in this kind of environment, we call these delta potholes. It's when you have a bunch of longs and a bunch of shorts in front of us and behind us, and it doesn't make sense. It's not very clear. So when you ask yourself, like, do you have to take a trade? You ask yourself, like, do you have to take a trade here? Right? Is this going to be an easy trade? No, I wouldn't say so. Right? And that's where I kind of lost money yesterday. I was forcing these trades upon the market, even when, things aren't that clear. Because look at this is the kind of price action that you'll actually get when you're trying to force these trades like this. So look at this. Right? Look at these candles everywhere. It's not that smooth. You're not getting like something like this, where you get a bunch of repetitive ones in a row. Right? You're just not getting it. If you switch it to the 1 minute, it looks even worse. Looks even worse. This is what you're getting. Just a bunch of nonsense. It requires you to be so precise. If you're a scalper, by all means, this probably was great for you. But not for me. I usually like to hold my positions a lot longer than a few seconds or 30 seconds or a minute or two. And so this is how you know, looking at the delta profile, that things aren't going to be that smooth. Now I'm going to show you Thursday, because Thursday was the last day that I participated on. And I know that Thursday was a relatively good day, right? So another example of basically today, right? Look at this. So I'm going to show you how clear this can be sometimes. And so I just showed you an example where it wasn't that clear. Now let me show you another example here that's just super clear. And it's these days that we know as a trader, I mean, if you're following my strategy or a quant data strategy or any strategy, when you're looking at the data, that when you see something so clear like this, you know it's time to size on, like put some risk on. What do we see? This is the open of the market. I haven't changed anything. What do we see basically right from the open? We said everyone and their grandmothers are long. There's no reason to short this market. Right? So when this is what we open up into, you know that, okay, our strategy is on. Our buy-side strategy is on. You can either start selling puts to finance the longs that you want to buy, or, hop on futures and start picking up the longs. But this is the difference. So you just saw a choppy day, right? You just saw a choppy day. Now this is Thursday. Let me bring you back. Let me bring you to the Thursday. Monday, sorry, let me do the 5 minute. Might be a little bit easier. Here's your Thursday, right here. Now I really want to remind everyone that this data is dynamic. So you do have to pivot if things if things change. But usually when you see something this strong, it doesn't change. So this is your Thursday right here, in between this. In between right here. And that's sometimes, I think people don't see this enough, like as much as I see it, that quant data is really a cheat code to the market, right? Whenever you get any sort of data, and it's not only a cheat code, but once you fully understand what it is that you're looking at, it's going to be a lot easier for you to hold positions. What I believe is with this data, you can be more confident in what it is that you're trying to do in the market. Because again, like this is your Thursday. It's clear as day that we're going to the sky. Now, talk about targets. This is how powerful the market or this tool or tools can be. What is the top today? So this is 640. This is Thursday. What's the top? What's the top of the market? Who can tell me, based on this chart, how can I predict the top? Right? Because how many people take trades and they just buy and they don't really know when to sell? They just sell when they feel like it. Now, I don't believe that's good. I don't think that's good enough for you to sell when you think it's good enough. I think it's best to sell when you've touched the target, when you've met the price that you're looking for. Tallest green candle, right? What is this called? We coined this term here in quant data. It's called the MVC, most valuable contract. Because we understand that gamma is an obligation. There's an obligation for the market makers to reach this point so that whoever's holding 6140 can sell it back into the market. That's their goal. So what's the top of Thursday? What is the top of Thursday? I actually don't know. 6145? Pretty darn close. Right now, let me show you at what point it changed, right? Again, the data is dynamic. So 6140, 10 a.m., right? Well, that's like right here. We're just shy of it, right? Now, when does this change? Look at that. Here's your new top, 6145. Hey, what's up, Sim? So that's me going forward, going through this. Now, I'm going to go through this really quickly before I get to Q&As. A couple things. I wanted to show you what I look at personally to determine bullish or bearishness going forward in time. It's very simple. I actually just take the cumulative look of gamma and delta. So here's the exposure by expiration. Ooh. Exposure by expiration on the delta side. I'm going to zoom this. I'm going to make this a little bit larger. So this is something that I look at end of every week to see if the general market sentiment is long or not. So what do we see? You see that generally everything is kind of long except for this, August 8th. I don't know what that's all about. But you can see that going forward in time all the way to December 19. The next biggest pillar we have is actually September 19 and December 19. These two OPEXs are going to be huge. Now, you can see that most people are long deltas here, which tells us that they are long calls and short puts, right? So this tells me that so far, dips that we experience in the market should be bought up. Now, we can also look at this. The gamma, right? Forward looking, you can see that everything else is also bullish. Right, forward looking. And I want to show you this as well. So if we remove the date, now these are the overall exposures on the strike chain from now until whenever the strike dates end. Generally, people are long, right? There's a lot piled at 6,000 in the money calls or short 6,000 puts. That's fine too. We have a lot of room now, and you can actually see that throughout the strike chain that 6,500, 6,600, 6,800. There's actually people longing these. right? Now you can do a lot more research, go through the heat map, for example, and start to see how much money and where the date is for this. But this just gives you a good idea because this is all dynamic data. This can flip at any point. If all of a sudden, Trump does something crazy, we've seen this stuff flip, right? And that will tell you that, okay, we should be risk off on longs, we should start shorting, or we should start hedging our positions, right? I know a lot of you guys have asked this question regarding what's going on with hedging, because we're seeing a lot of puts fly into the market, right? Who's seen a lot of 530 SPY puts being picked up for July 31st and July 25th? I know I have. I take you back to actually looking at last time we hit all-time high. Those hedges, you kind of see them as an obligation, right? The market makers aren't allowed to just naked long forever. They're not allowed to do that. I mean, people would probably get really pissed at them for doing that, right? Tail risk hedging, that's right. We never know, and so usually you'll see this. You'll see this behavior when we hit all-time highs. So, going through that, I was going to talk a little bit about trader mental, but I think I'm going to run out of time here, so I'm going to save that for its own separate segment recorded for YouTube. I want to talk about how to take your thinking from beginner trader to a pro trader, because I think you guys have known me for some time now. I've been full-time trading for some number of years now. So yeah, as promised, left a lot of room for Q&A, so let me take a sip of this water. Let me scroll up in the chat here. Who knows? Maybe 30 minutes is actually too long for Q&A. I don't know. But this was your request. This is your request. Whoever asked for that, I hope you're here. Otherwise, I'm going to be like, what the heck, man? Hey, first time here. Welcome, welcome. Gus, first time Q&A. Welcome, welcome. Hope you guys learned a little bit of something. I try my best to teach a little bit of something every time, or at least make it entertaining. If you want me to dance on camera, I'll do it. I'm a pretty good dancer. Y'all see, y'all see it one day. Okay, let's see. What does it mean when there are tall green histogram bars on the strike prices below 6,200? So delta is it's not really forward looking. It's backwards looking. So when you see this, for example, I really should have just started a new one. So delta goes like this. Delta, in your mind, I'm going to say it right now, you should be looking at delta as support and resistance. Okay? Support and resistance. So because it can go like this. Now let's say price is trading here. Now again, delta is not forward looking. You cannot use delta as a forward looking Greek because it encompasses all the Greeks. It's the final result of Greeks. So when price is here, and let's say this right here is 6,200. Let's just write 62. When price starts to come down this way, what do we expect? You should actually expect that this should be a level of support. So we should bounce off of this level. Of course, you have to use all three Greeks together. You have to use all three Greeks together to give you an idea if that level is going to be supported. Right? So right now, from what we're looking at, if price does come to 6,200, we should bounce. Why? Because that's a lot of delta to get rid of. Remember, again, support and resistance, it represents long calls and short puts. If market makers and dealers have 5 billion worth of exposure there, do you think they'll let that go? Do you think it's reasonable for them to let that go? No, it wouldn't, right? Because they'd lose their ass if they lost that 6,200 level, right? They'd be in a lot of trouble. Gamma is the Greek that you want to use for forward looking. Gamma and Vanna. Now we know Gamma and Vanna taper off eventually. I'll show you really quick. I've shared this before, but I think it's really great. I got pinned this somewhere actually. This is my little NFT. If someone steals it, I'm gonna be mighty mad. I'm gonna be mighty mad. No, I'm kidding. I won't be mad. You can steal it. I don't care. So this one here is forward looking. So Vex and Gex. These two are the primary magnets for price. Again, we called the top of that Thursday 61.45, right? We called it based on gamma because that's the highest pillar, right? That is the level of interest. And with all the long deltas behind us, we knew that every dip that we get is another opportunity to go get a better value long. But based on gamma and Vanna, in the mornings, Vanna, because it's a direct correlation to IV, to volatility, it actually does hold more weight than gamma. But right after London close, so the first hour, right? The first 2 hours, Vanna holds more weight, but then right after that, gamma is the one that takes over quite with relative strength. Into the last 2 hours, especially, gamma just ramps up to the most important, and then Vanna you can actually start to ignore. So you'll learn this the more you study options, the more you understand options. Options Greeks. This is something that is free to learn everywhere. So let me move on to the next question there. Just the sum of total delta per strike. So I look at it at a cumulative level. So you can see here, you can do this, like net difference. You can look at it like that if you want to. I know some people prefer it that way. But in my opinion, it's best to just leave it off so that you can it doesn't give you extra noise, if that makes sense. Gus, okay, so I love this comment right here. So you must have been talking about today. So he says, when you compare the army, are you comparing the green call histogram versus the red put histogram? Yes, I am. Got scared on the big drop. The sky is falling. Yeah. So again, most beginner traders, even intermediate traders, like there's no shame in it. Sometimes we see that too. I definitely would have gotten scared too. If I saw that today, let me see right here. Ooh, where is it? Right here. If I saw this, I would have thought the same thing. Right? But again, if you participate in quant data, the more you understand data, you'll know that this was actually the best buying opportunity that the market could give us. This little bit of Vietnam tariff news. Went long SPX. Nice. There you go. VWAP, one of my favorite indicators to use. What up? What's up, man? Do you pay much attention to SPX Gamma pre-market? No. So SPX, this data here, right? All the index products, they are 24 hours. So SPX is live all the way through. So you could actually use this for London session too. I know some people use it. I don't use it as much for London sessions. It's just a little bit, not too much volume. Sometimes there's a little bit noise. But the 30 minutes before the market opens, if you actually take a look at it, it actually changes a lot. It fluctuates a lot. And so because of that, I don't look at it pre-market. So hopefully that answers your question, RJ Fish. How's that calculated exactly green bar versus red for delta expire? So the calculation is proprietary, so I don't know it. I can't share it. But in the past, if you wanted to be a cheapo, you can actually go into the options chain and start. And this is the thing; it'll take a lot of work. This is why quant data exists. This is the beautiful thing about it. You could go into this and calculate it yourself. You could take a look at the volume and the open interest, take all the delta and just add it up together. The only problem you'll find is that you actually don't know who transacted it at the bid and who transacted it at the ask. So who's buying and selling. So that's the problem you'll run into. And you need options data to do that, right? You need options order flow to be able to calculate that. What do you mean by 1 million divergence? So this right here, if you look at the net drift, for my filter, I like to look at 1 million in divergence. I like to look for a point in time where calls, let's say if we're bullish, I need to see calls surpass puts by over $1 million before I start to feel very confident. Sometimes I'll take trades, like it's just a rule of thumb, but sometimes I'll take trades before that if gamma and delta are kind of lining up. But generally, I like to see that first. So you can see here, if you were bearish, right here, at this point, you'll see that net put premium is positive 1 million and net call premium is negative 40. So is that a million in divergence? It is. The net premium difference is a million, right? Before it's not. It's only 600K, 500K, 300K, right? So that's what I mean. Full port ahead. So you're going to trade tomorrow. I will be here tomorrow. I'll be here short though. Market's closing like right after New York City lunch. I'm probably not. I also suspect that tomorrow's volume is going to be abysmal. So we'll see how long we participate for. Probably be here for the open, and then that's probably going to be it. That is done by market makers. Try unload it. So you can actually, Sava, you can actually do some research for yourself and answer this question. We'll give you a little bit of homework. Why does the market move up based on options? Why does the market move up? Specifically SPX. And the hint would be dealers are primarily short. Oh, let me write hint. There's your little bit of a hint there. Can you show how to get max pain? 100%. So max pain. So if you go here, how to get this window. I'm going to bring it up for you. So if you hit the plus sign, it's actually right here. Go to the options. Go to add tool, right? Options, max pain is right here. So James, that's for you. Can you explain how to read net gamma by expiration on SPX? Looks very different. Hopefully I just hopefully I just answered that for you. Gamma and delta are completely different things, right? But they all, in the end, add up to become delta. So I think if you wanted to learn about gamma and delta, there's a really good course here, Tasty Trade Options Crash Course 101. I really, if you're trading options and you don't understand delta and gamma and Vanna, these are the three primary buy-side Greeks, I think you're in trouble. I think you should probably take a step back and learn about options first before you trade such a tool. Once you understand exactly what it is, seeing this chart, you're going to understand what it represents in the market and what it kind of gives you hints, right? That's all we're trying to do as traders. We're just trying to look for hints as to what's the most likely scenario for price based on what we're seeing. Appreciate it. Is there a way of you graph vertically? No, there isn't. That's coming though. See, Rob, this is coming. This one right here, it is coming. I've been using ChatGPT to try to understand the info live. Ooh, very good. Can you please show us a clear down day? Also, you mentioned something about fade trades in the morning. Can you explain that further? I don't remember what I said about fade trades, unfortunately. But you want to see a clear down day? 100%. 100%. What was the last day we had a red day? Because I'm going to have to go back in time. I'm going to have to go back in time quite a bit. Let's see. Da-da-da-da. Let's go to May 21st. May 21st. Hope you're all having a good time, by the way. Keep asking questions. If you have questions, I'm here for you. I work for the people. I work for the people. I also work for lunch. But my colleague Levi never pays. So gotta work him a little harder. Oh my goodness. Here's your down day. So obviously the day didn't start that way. We had a little bit of a climb up. Is there a better example though? Is there a better example of a day where we did not climb up? Let me see the chart. Ooh, Tuesday, April 2nd. Tuesday, April 8th. Let's see what that looks like. April 8th. Yeah, this looks pretty good. Let's do April 8th. So, because you want to see a clear down day. Really, it really is just inverse. You just flip it around. So, when did the down start? Is this the same day that I'm looking at? April 8th? It was actually a bad day. It was hard to read this. I bet you this starts to flip though. Does it flip? Or am I looking at the wrong day? Ooh, this is not that clear of a down day. April 4th. Let's give it one more go. Sorry, let me read your chat after. Because I want to give you a really good example. I'm working for the people here. Yeah, okay, this is pretty good. So this is I'm pretty confident this is going to be a day where it really shows us that we gonna die, that we are going to drop. This is your bearish day. My goodness. I bet you this is all puts too. Yeah, 100%. Just puts all day. Yeah, bullish days are fantastic, but bearish days, you know, it's really going to be the same thing. It's just flip it around. Let me go back to this fade trade question. Oh, okay, yeah. This answers your fade trade. Again, the data is dynamic, so when you get long deltas, there have been times where long deltas of over 1 billion actually get flushed into becoming short. On those days, one of these days you'll see it. The days, you know, trade days is dynamic. Everything changes all the time, but we've seen. You can actually just imagine in your head too. Like, you understand what happens when someone is long 1 billion worth of delta and they have to all of a sudden sell it all. What do you think happens to the market? What do you think happens to price? It slides heavily. Like, it becomes a sell off because they had to get rid of all their deltas, right? From becoming 1 billion long to whatever it is to short, even just getting rid of that billion. We've seen it before. So that's the fade trade that I'm talking about. What happened today for that dip? It did not fade. We did not get faded on that. Delta was still relatively strong, and so that's why we bought the dip on that one. So yeah, hopefully that answers your question. So gamma is where it's going. They need to sell off. Can you explain the 3 Greeks yet again? Delta to direction, support, resistance, not forward-looking, banners, volatility. Ooh, okay, last 50 minutes. Okay, because there's new people here, I'm just gonna do this. But I want to answer the rest of these questions. So we're gonna stick around a little bit longer. Some of you guys have seen this before, but I think this is a really great way to visualize it. It's also on my YouTube channel. So if you did go on my YouTube channel, you can see it, but it might be a little bit hard to dig. But so there's 3 main buy-side Greeks. Now, Quant Data does also have Charm. But the reason why I don't talk about Charm too much is because it's the hardest Greek to understand. Not only that, It's mainly used for sell side. So if you're a credit spreader, if you're someone who collects credit, this is going to be the Greek for you. But again, for me to explain it to a bunch of beginners, it's really hard to do without you first understanding delta, gamma, and beta. Okay, so we understand, right? Really quickly here. I'm going to do this too. So this is very base level first, but you need to understand this first. So let's say SPY contract is at $1. SPY is trading at 500. So delta is 0.2, gamma is 0.1. What happens, or sorry, what is the price of the contract when SPY goes to 501? What's the answer? Who knows the answer? This is for you, Zohan. And for everyone else, I think this is going to be really useful. Because I'm looking through the rest of the questions or not. I think that I've answered them before. No, but I will go back anyways. 1.2, right. The answer is 1.2. Right? You're correct. What is the new delta? What's the new delta? Who knows? It's 0.3, right? You don't know? Alright, you shouldn't be trading options yet. You gotta learn a little bit more first. Because that brings you into trouble territory. 100% it does. I kind of always equate it to this. Should you be trading options if you don't fully understand what options contracts entail, what they represent, what they do, how they're priced? Would you buy a car before you get a driver's license? Unless you're rich, different story. But if you're a brokey like me, do we buy a car before we learn how to drive? So why would you trade options without first understanding what options are? Right, so the new delta is 0.3. Why? Because the gamma adds on to the delta. At some point, gamma does have a ceiling. That delta, that gamma stops adding to the price of delta eventually. It gets topped out when contracts become in the money. Okay? So, very, very quickly. That's how it is. So, how to best visualize this when you're trading the market is kind of like this. Now, this is the way that I visualize it. Okay, this is the way that I visualize it. And if you don't like it, well, you can figure out a new way. This is delta. Okay, I'm going to put a D here. This is your engine. Okay, I know I just went over this last week, but it seems like there's a lot of new people here. It's a very beginner level class. This is your engine. Okay, it's your base. Who likes cars? I'm going to assume everybody likes cars. All right, so this is the coolest car in the world. It's a little Fiat. So you got a 120 horsepower little Fiat. What happens when you put your gas pedal all the way down to the floor? Sav or Gus, anyone that's new. Right? You accelerate. You get a very predictable acceleration, right? That's all you get. You just get this. Right? We're going to call this the Wampa Mobile. In honor of Wampa here. This is your dream car, buddy. It's a little Fiat. Okay, cool. So that's delta, right? It's the base of the engine. Now what happens when you add a turbo? This is gamma, right? Now we just saw how the math of gamma works, right? Now we add a big turbo. This is the turbo. Okay. Same car. Okay, same little Fiat, the Wampa Mobile. What happens now when we press the gas pedal? Right? You get this, right? Well, bam. A little bit less drastic than that. Right? But this is where your turbo kicks in. This is out of the money contracts. So Why is it more beneficial for you to trade out of the money contracts versus buying in the money contracts unless you're doing a spread? It's because you get to capitalize on gamma ramping up the premiums of the contracts. Now, whether you trade options or futures or shares, during the New York session, options dominates. Options controls the price of the overall US market. That's just the truth. You ever want to debate on it? Take a look at the premium spent on the options market versus the premium spent on the futures market during the time that the New York market is open. It's literally like 5x, right? So this is you buying in the money contract. Okay, so why do we stay away from in the money contracts generally? It's because the risk to reward is not there. You're actually buying at the contracts that are already overpriced. They've already juiced out all the premium that it can get this ramp from, right? If you buy out of the money and it becomes in the money, this is where you are. When you buy in the money, you're looking for like just a little bit more. Sometimes as well, you'll get an options contract that you bought in the money that becomes out of the money. Now there's one truth to options. All out of the money options expires worthless. All of them. No matter what. Doesn't matter. There's no value. There's no intrinsic or extrinsic value to out of the money options when they expire worthless. That's it. Right? So that's your gamma. Okay, so now we've covered the two buy-side Greeks. Right? Now there's one variable. Now we talked about this earlier. We talked about this earlier with this curve. Right? It's based on IV. Right? Vanna. This is the volatility. Okay? I know. Hopefully I'm not going too fast. Hopefully I'm not going too fast. I am going to go back up and read the other questions. But I want to go through this because there's a lot of new people here today. And this is like very basic stuff that you should hopefully know first. But slow me down if I'm going too fast. This is your last variable. So we understand delta is the engine. And we understand gamma now, right? Give me a thumbs up in the chat if you do. For the new people. For the other people too. Good refresher as well. I'm sure. Here is your variable. This is Vanna. This is gonna be. I swear to God, this is you're only gonna get this from me. But this is how it helped me understand. It helped me understand price and options contracts. I like to put a little bit of humor in things. That's how it helps. Hopefully, it helps you guys too. So Vanna is your wife. It's your partner. Okay? It's the variable. It's volatility. We know volatility of rubber bands. It goes crazy. Sometimes it agrees with you. Sometimes it doesn't. Right? But let's say you're in the car. Right? Same little Wampa mobile, the Fiat. Right? Now you're driving fast. Pedal to the metal. You think you're Dominic Toretto. Right? You think you're Mr. Walker there. You're driving. Gamma kicks in. And now your wife tells you, hey, I need to pee. What happens to your car? It goes like this, right? So there's Vanna. This is gamma. I know that the bell curve's a little bit messed up, but I'm doing this on like quick style. So your wife says she needs to pee. You need to drive faster, right? So what happens is your car all of a sudden gets another extra 50 horsepower. The premium now is heavily elevated. Now we've seen this before where price just starts to skyrocket, right? Let's just say in a bullish environment. We all of a sudden get like juicer candles, some ripper candles to the upside. That's Vanna. That's Vanna doing its work, right? And so that's included now. It's your premium. It's adding to the premium. So this is how I look at the curve. So these are your three buy-side Greeks. Now, your wife can also be like, hey, you need to slow down. Who do you think you are? Some sort of race car driver? right? Like you driving a Porsche, but what in the world? Like, well, come on, we got a hybrid for a reason, right? Thank God she doesn't hear me. Right? So she says no, like we don't like this. So then now what happens? You start to fizzle out, right? Vanna doesn't kick into the effect of your options contract. It does nothing. So now all you have now is just raw delta and gamma pushing your options contracts up. Right? So this is your variable. She can also say no as well, like you need to stop. Vanna can also be inverse. We've seen this before where delta and gamma are bullish, but Vanna is bearish. Right? In every market environment, every day you come into the market, things are different. That's why I always say this data is dynamic. So you'll see that, okay, calls are showing value, but for whatever reason, there's volatility in puts. Is that a clue? Right? Again, as a trader, all you're trying to do is answer these three questions, right? What is the most likely scenario for price based on what you're seeing, right? And then number two is it worth your participation? Three is, how would you participate? If you say yes, it is worth your participation, right? You've seen me sit on trades, for those guys that participate in the live stream, you've seen me sit on trades for, like, not take a trade when I'm expecting price of SPX to move $3 or $5. Is that worth my risk? No, that's a lot of effort to take a trade for $5, right? So yeah, that's how we view the market. That's how we view this options data, and hopefully, you guys spend some time to take the Tasty Trade Options Crash Course. It's free, right? If not, there's also Investopedia. Just do some deep reading. And really ask yourself. I'm going to release a video later on today about how to turn your trading brain from beginner to professional. Because I think that's really important. Some people trade the market to participate. And I don't know, if you're trying to grow, if you're trying to make money, we don't participate like that. We trade the market. Right? We don't just throw money into the market just because. There has to be a reason as to why you're putting money in the market. But I'm not gonna ruin it now. I will make this video tonight, and I think it's gonna be a really worthy watch for you guys. Okay, let's go up to this chat here. I'm gonna answer a few more questions, and then I'm gonna leave. Got to see Sig's trading floor. Nice. Do you have any books to recommend on understanding price action or market movements? No, Beats by Dad. I don't. I think price action or market movements, that's just going to be time in the seat. I think what's more important is how you can manage your risk, right? A lot of people can take risk. A lot of people can take risk in the market. That's no problem. Anyone can buy and sell something. But it's how you manage that risk. That's actually more important than price action and market movements. It sounds like you're looking for, maybe clear strategies. I'm not. Yeah, I don't have anything for that, unfortunately. Will there be price convergence from SPX or ESNQ at some point? I know that every quarter ES is rebalanced, right? There's a new contract and all that. I'm not really sure how to answer that question. Price convergence as in like ESB that's the same as SPX. If that's your question, it's going to be a no. I'm pretty confident that it's priced just entirely differently. ABJ, I might have missed it, but how do you use read vex? So I just went over this. Hopefully you got it. What do you think of fair value gap strategy with futures? No, I don't use fair value gap strategies. I don't really believe in things that are based on the chart. Charts and candles are great. Indicators are great for you to know where price has been. But I am more of a believer of options, like studying options, because that can tell you the future. Options can tell you the future, whereas price levels, that just tells you where price has been. That's fantastic to know where price has been. But yeah, I don't know. Also, if you take a look at fair value gaps or gaps in general, it's like a coin toss. There is a study that was done by, I think it was Harvard, one of the schools, about gaps and how often they're filled. But I think that study's flawed because they included all the gaps. I think the only gaps that matter are the ones to the downside. And if you did a study on that, which someone in this Discord did do the study, it's only 52%. All the gaps below us in price, they've only been filled 50% of the time. So if that's a gap, then I don't know. Theta does correlate into IV in the end, right? So we don't really talk about theta in that sense. It's just for day trading, we only want to focus on these three for buy-side Greeks. That's how I like to do risk or manage risk. We're talking about how we... Okay, this one we answered already. OnlyFans subscription? Oh, brother. We're moving up, man. 1597. With the net delta exposure by expiration not showing big green candles in September, what's this institute potential market? Possible, that guy. Possible, but I think that September is really telling. And again, look at it at the end of every week. I make it a habit to look at the exposures at the end of every week. 607, would be it for another 3 minutes. Hey, that's pretty good. Let us know a little bit more about that. You mean Delta would have flipped red? Yes. If Delta gets faded, we've seen it before where the Deltas, again, like a billion, for example, something major happens to the market and this whole candle just flips red. That's a lot of long Deltas that get flushed out. Any insight from looking at further out DTE? Yeah, I like to look at OPEX dates. I don't really like to look at weeklies. We know big market participants generally participate in OPEX days only. So that's for you, Zohan. I generally don't like to swing things outside of, like, just in between OPEX dates anyways. You'll know that all the positions that I hold, TSLL for example, it's all primed for OPEX dates. Again, because it has the most interest. It's the most telling. Question on net flow premium. Sometimes I see large net flow premium at the end of the big moves. Pivots the other way. I would think to show up more in the bid and ask. I've stopped. So you need to. So actually, let me do this. This is a really good. This is actually going to explain a few things for you that will probably answer your question, and it's about filtering. A lot of people look into the options data and they assume that $1 billion or 500, let's just say someone bought $500 million, right, of calls. They think that's going to immediately move price. What they didn't know is that they bought it for 2027. With filtering options data, you should filter for exactly what it is that you're trying to accomplish in the market. If it's short term, you should be filtering for short term. If it's long term, you should remove everything that's short term and only look at the long term. The reason is because if I'm a day trader, right, for example, if I'm trying to day trade for cash flow today, like I want to buy and sell my stuff today, would I be interested in someone buying 90 days out? No. If I'm looking to get a position on for Tesla and I'm willing to buy dips and whatever comes my way, am I interested in someone buying 5 DTE call? No, not really. Right? I'm not interested in that. So that's the importance of options. Like you have to identify what it is you're trying to accomplish and then filter for exactly that. So hopefully that answers your question, Sava. We'll get into the end of it. That's pretty good. If gamma is more true than more value out of delta, I don't understand that question. Maybe I'm getting tired. Should I look at Greeks for further out DTE? Yes. Even when scalping for over. No. If you're scalping intraday, you should not be looking for anything that's further out in time. That doesn't make sense to me. Do you believe NVIDIA is Wall Street favorites? What moves the market the most out of the Mag 7? It's the the NYSE is the NVIDIA York Stock Exchange. Whatever is moving the Mag 7, it's just sectors. I don't think it's one particular stock. Some people might claim it to be. Obviously, NVIDIA is a very large company, but I think it's sectors, individual sectors at each time. This is for you. Oh, this is pretty good. Oh, I like this. Haha, Kingman, much appreciated. This is awesome. I'm going to save these. I love it. Dude, this is all of our community. This affects options with... you might have to remind me on what it is I was talking about. You have to be emotionally intense. Yeah, I'm on YouTube. I don't have a large YouTube channel, but I post what I can. I never thought I would be a YouTuber or anything like that, so bear with me. There's also the same thing, but Quant Data. You should subscribe to both. Hey, really good session today, guys. Thank you for tuning in. That's for sure. Last question here. Books overrated? No, I don't think books are overrated. I think books are fantastic. What's the difference between delta and dex, gamma and gax? The ones on top with the ones on... interval maps. Okay, interval maps. Really good question. So interval maps is just an easier way for you to see things across time. That's all it is. So interval maps goes like this. You can see that over time, 6200 got stronger, right? Over time. That's all it is. So you don't have to use the time slider. So it's really the same representation, just across time. This updates faster though. This updates every second. Whereas this updates to whatever aggregation period you put on. So I did 3 minutes. What charts or data could be used to assist with trading overnight? Net drift for sure. That would be it, actually, just net drift. I wouldn't actually use the options Greeks for overnight. But we are going to get options data. All right, cool. Yeah, so I think that's all the answers, all the questions I'm going to go through today. Thanks for tuning in. Yeah, well, look out for my trader psychology video because I think a lot of people overlook it. A lot of people don't think the way that we think as well. Once you go through that video, I think you'll start to ask yourself more questions about your trading. Right? The primary thing is this. If you were to hire someone to manage your portfolio, would you be pissed at your performance right now? And you hired yourself, right? Would you be pissed? Would you be upset with how they have conducted themselves in the market? And if you would, then you're not actually trading. You are gambling? I don't know. Might as well give your money to me. And again, welcome to all the new people. I'm going to cut the recording here.